Let's now get across what investors have been doing this week. We're joined in the studio live, Gemma Dale from nabtrade. Gemma, great to have you in. Thank you so much for joining us. So how would you sum up the last week? Trade size, volumes, where do we sit?
Yeah, it's quite interesting to see how investors are responding. We always look quite closely at what people are doing and the trends that come through at this kind of time. So volumes are quite elevated. So we are seeing a lot of trading. What is most interesting is it tends to be more experienced investors now, and trade sizes are much larger on average. So we saw a lot of buying the dip from younger investors back in January. There was quite a bit of excitement, and there's always a bit of a New Year's Eve effect or New Year's resolution effect. In January, we could see that in our younger traders. They've drifted away. This market is confusing them, and they're not quite so sure what to do.
Well, it's a bit of a harsh lesson, isn't it? Particularly if you're new to investing, you go to buy the dip, it can end badly.
Yeah.
And it depends on what dip you were buying as well. If you're buying the dip in Zip, I saw up there earlier,
yes,
that was one they loved, right?
Yeah.
They traded it all through last year. That was quite the dip, and then there was another very substantial dip to come for a lot of them. So it's more mature investors at the moment. They're far more experienced. They're trading at the margin on fairly sizable existing positions. So it's a fairly confident group of people at the moment who are trading, and they're moving big amounts of money around, trying to ensure their portfolios can weather this.
How would you describe their cash levels at the moment? Has that increased significantly recently?
Yeah, cash is way up. So our high interest account, obviously the title is, it used to be a thing, having high interest, but now it's just really where you park your cash when you're waiting to invest. Incredibly high levels. So it is at a peak at the moment. It hasn't been this high before. We saw cash peaking before COVID. So before the COVID crisis hit, we saw all of that cash run down. It has been building, but we're seeing really sizable deposits at the moment come in from other sources. So at the moment, this is not sort of steady upward trend. It's a big spike right now with funds coming in. You feel like a lot of people are waiting for a collapse. They're waiting for things to really get going, and they're going to move in.
Well, we've got to talk about the energy sector because it has been the talking point of the week. Have traders been jumping on board?
Yeah, this has been quite interesting to observe. So trading in energy has doubled. It's not hugely surprising. It's not the largest sector for us by any means, but it's driven out a lot of the smaller, more speculative stuff and the trading stocks. So the brain chips and whatever that everyone was excited about a few months ago, that's not there at all anymore, and energy has completely taken its place. What we saw when Woodside had its first little pop, we saw quite a bit of trimming. So those guys have been hanging on through the tragic downward trend that they've been watching over 5 years, and energy saw a window to kind of get a bit of cash out of that sector, but we're now starting to see some buying again. So they haven't assumed that this is the end. There are quite a few people moving back in now. And again, the trade sizes are big. They're not little, they're quite large.
Yeah, of course, we've seen Woodside, one of the biggest, of course, along with Santos. How have investors been treating that stock? Because they're looking really well positioned given where those oil and gas prices are at the moment.
Yeah, it's obviously, it's worth noting all of these investors are very aware of what's going on in the world. They do watch oil prices, and they obviously watch iron ore prices and every other price that they need to be aware of. So we haven't seen a dramatic shift in the number of holders overall, but we've seen some people kind of get out, having had a rough run, and others getting in, but the sizes are large. Woodside's a top 20 holding, which did surprise me. I didn't expect it to be quite that big because Santos is nowhere near it. Energy, that's the only one that has a really meaningful holding in the base, and we've got some people who are accumulating now.
When you say you're surprised it's in the top 20, is that because more and more investors are conscious of their ESG commitments, if you like?
We don't see a very strong ESG theme among our investors, if I'm honest, unless you look at ETF buying, and that is a long way down the book, like a long way down. There will be buying of ESG thematic ETFs a bit. You don't see it very strongly. Our guys are very cost conscious. If they see something cheap, they will buy it, irrespective of the reason it's cheap. And if they see it getting a bit expensive, they'll sell it, and they're not too fussed necessarily about what might be driving the price.
The nickel price action that we saw this week was incredible. I've never seen anything like it. Nickel mines kind of had a tailwind effect on their stock price. Were people trying to buy once that price dipped?
Yeah, so it was the most traded stock yesterday by number. Trade size is really small, right? That's clearly a specky buy for a lot of our guys, but they were very happy to be specky. We saw huge enthusiasm for it. It's interesting that, nickel's had some tailwinds for a while, right? It's not completely new, but that brought it to everyone's attention in that particular company. And so when it wasn't in trading hold, they were all over it.
All right. What about financials? How popular have they been, as well as the fund managers?
Yeah, so this is really interesting. They're obviously getting their money for energy from somewhere else, and a lot of it's coming from financials. So they're really trimming. CBA, $99. It was a little over, was the average price. It was a 90% sell. So they're really happy to take profits in financials if they get the opportunity. And we saw the same with NAB. NAB was $29.58, I think was the magic price yesterday. Again, huge selling. So they know their bank prices really well, and they know when it's a good time to get out, having seen them run at various points. So, NAB was up 3.5% yesterday, right? There was a lot of trimming on that one and rotating back into, really it's all about commodities at the moment for our guys.
What's happening in the US?
Yeah, so this is also very interesting. There has been continued buying in Tesla, because there's always continued buying in Tesla. And we can talk about a theme, but it's been a theme for like 4 years, so I'm just going to assume that it's going to keep going. The one that popped up was a single buy in a single share in Berkshire Hathaway Class A shares. And that pops up as a $690,000 transaction in Australian dollars. It's one share, but it's a big one. And someone's quite keen. They think Warren's going to keep going.
Yeah, because he just made, what did he just I was trying to remember what he purchased during the week, what he bought into, but he has been because he's been pretty quiet of late.
Yeah, I had his letter to shareholders, which sort of got him back in the press. It was a couple of weeks ago. His biggest holding's Apple. And it's a huge holding as well. It's not like it's a tiny proportion of his portfolio. So there are clearly investors who feel that the best way to get a concentrated but reasonably diversified portfolio of high-quality US equities is to spend $700,000 with Warren Buffett. And it's worked for 60-something years, hasn't it?
I remember now, and it makes sense, of course. Occidental Petroleum. $5 billion worth.
That's enough. That'll probably help
that's a chunky trade.
He'll do well.
Hey Gemma, I understand, look, it's been a terrible week when it comes to floods here in New South Wales and Queensland. I understand NAB are doing something next Thursday. Tell us all about it.
Yeah, so we have our annual charity trading day, and we've been doing that for 5 years now. We're completely out of cycle. It's normally in November, but we wanted to do something. So we're having a sort of spontaneous trading day for charity next Thursday. So all brokerage next Thursday will go to Give It, which is on the ground. They do hands-on donations, food vouchers, supermarket vouchers, that kind of stuff, fuel vouchers. That's quite helpful at the moment, given what we're talking about. And so every dollar of brokerage will go to those guys next Thursday to help Queensland, New South Wales, everyone else affected by the floods, hoping to raise about $250,000.
Amazing.
That is a terrific cause. So many people hurting out there at the moment. It's only, and the number of people that have been affected is increasing still, even though those rains have pretty much eased. So that's a great effort. Thanks so much, Gemma, for joining us again from nabtrade.
Thank you so much.
Thank you so much.